Hello everybody, McGee Wolf with the Wolf Group. Just wanted to say, what in the world happened to interest rates? This past week was pretty shocking, especially Thursday. Interest rates made a really strong move. They'd been heading in that direction for about 10 days, and man, people were calling me, my phone was blowing up. What in the world has happened to interest rates? So I just wanted to make this video to try to give you a little bit of perspective on it. We all thought that 2021 was going to be the year of stability. Everything, was behind us as far as all of the craziness of 2020, the pandemic, the election, and then what do we have? Historically cold weather all across the country, people without power, terrible situation. In fact, in my house, we had no power for 3 days, and when I was breathing, vapor was coming out inside my house. It was actually 40 degrees inside my house. So everybody been through it, some worse than others, but anyway, we all thought that 2021, we welcomed it in the new year, is going to be a great year. As far as interest rates, the year of stability, we've had a year's worth of really good interest rates. So we just, the only really big issue we've been dealing with in real estate is a lack of inventory. So this really came as a surprise to many people, but you may have heard me say before, I didn't come up with this, but historically, interest rates take the stairs down and the elevator up. So that's kind of what has happened, and but we're still in a great place. So let me share a graph with you, many of you have seen before, that maybe puts things in perspective for you, and we drill down a little bit on it. All right, so let's take a look and see what all this fuss is about. This is a candlestick graph. For those of you who've been watching some of my videos, you'll recognize this. It shows each day the volatility in the market and how it's the rates are moving in a favorable direction, which is the green candlesticks, and red is in a very unfavorable direction. And this is the last 6 months that we've had. We ended up Friday recovering quite a bit from what happened on Thursday, which actually caused me to scream out loud. Many of the people on the team had never heard me say the word that I said, and it was very upsetting. But nonetheless, you can see that for this really began to take shape on the Monday following Valentine's Day. Right about here is when it really started to move in a downward direction. And for the last 10 days or so, 10 working days, the market has really been soft. It's just been losing ground. Interest rates were in an upward direction. So, it looks awful, and it really is emotional, and people get upset about it, of course. But honestly, this is the last 6 months. So let's take a look for the last 30 years, what interest rates have done. Let's just kind of keep this all in perspective. You've got, back in 1975, rates were at 9.5%. Look at this. In 1983, they were almost at 19%. That was like the worst time in the history of interest rates. And interest rates, this is where we are right about now. So on a historical perspective, for us to have rates in the 3s or the high 2s, that's a wonderful place to be. If you look at the last year, let's see. Let me do this. In the last year, let's look and see what rates have done. You see, we're very favorable. Back here, rates were in the 3s until we got to around this time last year in 2020, where rates really dropped considerably. And this is where we have been for a year, and the market, changes over time. So
one of the questions people are asking is, why have rates suddenly done this little move over here over the last 10 days? And there's a lot of speculation on that. In my opinion, I think it has a lot to do with the anticipation of inflation that's coming. Our federal government is piling on even more debt. The new $1.9 trillion stimulus, which is just loaded with just crazy stuff in it. That has the market concerned. But as long as the federal government continues to have this appetite for debt, it's going to keep interest rates down. So is down as low in the twos? No, I don't think so. We may be seeing the end of that run. But honestly, just as a reminder to everybody, not don't go jump off a bridge or anything. Look at the historical reference relative to where we are right now. Rates are still very, very good. One of the mantras that we're saying right now is that if you like your rate, go ahead and lock it. So, another thing I've said over time is the pain associated with a higher interest rate is more significant than the emotional joy of having a lower interest rate. So, if you're upset with your mortgage lender because you weren't locked in and that you're not under contract yet and you call to get an updated quote, don't be mad at them. This is just what the market has done in the last 10 days or so.
All right, so hopefully this has calmed you down a little bit. Interest rates are still great. If you like it, lock it. If you're looking to refinance, now is definitely the time to really get your material in and get it to your lender and get everything in place to go ahead and get locked and close. If you're purchasing, we're trying to help our clients as best as we can to put them in the strongest position as possible when they make their offer in these multiple offer situations. If you haven't seen my video on the 14-day close, I encourage you to look it up. We'll put a link to it down below. But anyway, it's still a great time to buy a house. It's a great time to refinance your home. Real estate is awesome. Property values are appreciating significantly. It's just a wonderful time for everybody. If you're renting right now, please call me or someone else and have them do a rent versus own analysis for you. The finances of it are startling. So take care, everybody. 2021 is still going to be a great year. I hope this finds you well, and I want you to have a great day.